Hey guys, Trade Under here from Steady Trades. I want to talk to you about something important. I want to talk to you about risk management. Why is it important to manage our risk? Well, because only 95% of traders will ever make a profit. Options trading, especially, is volatile and can cause people to blow up accounts easily. All traders start with the same idea. Everybody wants to get rich quick, right? But only 40% are around after 1 month. 80% quit within the first 2 years, only 7% remain after 5 years, and less than 5% are profitable after that time, right? Options trading, you can blow up an account easily. Look at this. You want to laugh? Go to some of these forums, go to Wall Street Bets, go to other places, and see how much money traders are losing because they don't know how to manage their risk, right? So what do we have to do? Before you even begin trading, assess your personal risk. I get this a lot. People come in, they want to start making money, they invest everything they have and they lose it, right? This happens a lot with younger people. Now, the good thing with younger people is they have a lot of time to make up that money that they lost. But at the time, it seems like everything to them. So we have to figure out before we even begin trading, how much money are you willing to lose? Because that should be how much money you're willing to invest. We always have to assume that we're going to zero, especially with options trading. We have to assume risk and assume the worst case scenario. And only then should you begin trading if you're okay with losing everything that you have, because it's going to prepare you emotionally. So here are some tips and tricks to managing risk once you begin trading. Plan your trades. It's as simple as that. Plan everything that you're going to do. Plan the upside, plan the downside. Plan long term, plan short term, plan medium term. Plan your trades, plan your day trades, plan your swings. Don't just gamble. Set your stop losses and take your profits. A lot of people get too greedy, and a lot of people will be green, not take their profit, let it go red, and let it continue to go red. They will not take a stop loss. It's very easy to set a stop loss. You can even set a mental stop loss. Me personally, it's 20%. I don't care what's going to happen. If a stock is down and I am minus 20% on my options, I am going to stop the play to protect my assets. Diversify and hedge yourself. Hedge yourself in both directions. This is where things like strangles or straddles can come into play. This is where if you have majority calls or majority stops, it might be beneficial for you to take a short position to protect yourself in case there's any sort of movement that goes against what your current trend is. And speaking of trend, that leads me to another point. Play the trend. If you want to manage your risk, stop trying to call the bottom. Stop trying to call the top, right? Play the trend. The trend is your friend. Play it. I see too many traders try to predict where the bottom is, and then they just keep buying the dip. And guess what? Sometimes there is no bottom. And in options trading, especially, you can't always just keep averaging down. Don't try to predict the top, because then you're trying to short against a rallying army. Play the trend. Guys, this is just a short section on risk management tips and tricks. We're going to have a multi-series part out soon on risk management specific to options play and our strategies to managing risk, how we take plays based on account size, different sizing strategies. So stay tuned for that. This is just an introduction to risk management, and I hope this helps you to understand risk management and the risk that you take when you invest. As always, you can reach out to us anytime at Steady Trades on the Discord, through email, leave a comment, drop a like. As always, happy trading.